Hello everyone. Hope you are doing well. So if you are an investor who is keen to invest in global markets, overseas ETFs listed in India provide you a convenient option to take global exposure. But here's the catch. Many of these overseas ETFs are trading at a premium, sometimes as high as 20% on both NSE and BSE. That's unusual, right? Let's understand why this happens, how it can impact your returns, and what should you watch out for. First things first, why are these ETFs trading at a premium? The main reason is regulatory restrictions. The market regulator SEBI and the RBI have imposed strict limits on overseas investments by mutual funds. According to these guidelines, mutual funds can invest up to the limit of $7 billion in foreign securities. The overall ceiling for investment in overseas ETFs that can invest in securities is $1 billion, subject to a maximum of 300 million per AMC. These limits were reached in 2022, which led AMCs to stop accepting fresh inflows into these ETFs. While existing ETF units continue to trade on the stock exchange, AMCs can no longer issue fresh units to meet the fresh demand. The result? Demand keeps rising, but the supply is frozen. And just like in any market, when demand outstrips supply, prices would shoot above their fair value. Add to this the higher investment demand for US and Chinese markets, and that's why you see these ETFs trading at a premium. Now, what does this mean for your returns? Now, let's take a very simple example. Suppose an ETF's INAV, its intraday net asset value, is rupees 20, but it is trading at rupees 24 on the exchange. That means a 20% premium. Now, if the NAV later rises from rupees 20 to rupees 22, there are three possible outcomes. First one, the premium would continue at 20%. In this case, your ETF would trade around a price of 26.4 rupees and you eventually make a profit. Scenario 2, the premium disappears. The ETF will now trade at 22 rupees, and despite the NAV going up, you will actually make a loss because you have bought the ETF at an inflated price. Scenario 3, the premium narrows to the range of 9 to 10%. Now the ETF would trade around 24 rupees, which means that you break even. There is no profit, no loss. So what's the takeaway over here? Always check the ETF's INAV before buying. Use limit orders instead of market orders and be mindful of premiums. Otherwise, you may end up overpaying today and regretting tomorrow. So whenever you are looking to transact in an overseas ETF, make sure to check the INAV on the AMC's website or other relevant platforms. For more information, you can visit our website or social media handles.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.